Imagine this. You spend years saving, researching stocks, building a portfolio you believe in. But 5 years later, you're still not wealthy. Worse, your account is bleeding money, and you don't understand why. Here's the hard truth. You can follow every finance YouTuber, read every book, and still lose everything. Why? Because wealth isn't just built on what you do right. It's destroyed by what you don't even know you're doing wrong. In this video, we're uncovering 12 deadly investing mistakes that even the greatest investor of all time, Warren Buffett, has warned about, and in some cases made himself. These aren't just technical errors, they're mindset traps, emotional pitfalls, and silent habits that quietly kill your financial future. So stay with me, because the final mistake we'll talk about isn't just costing you money. It could be costing you decades of freedom. Before we dive in, if you're serious about growing your wealth and avoiding the traps that keep most people broke, do me a quick favor. Like this video, subscribe to the channel, and share it with a friend who's ready to take their investing to the next level. All right, let's begin. 1. Timing the market, the illusion of control. Let's start with one of the biggest traps of all, trying to time the market. Most investors, especially beginners, believe they can outsmart the market. They try to buy at the bottom, sell at the top, watch for signals, they follow the Fed, scan inflation numbers, watch YouTube videos that predict crashes every 30 days. But Buffett said it best. We've never made a decision based on a macro view. We focus on individual businesses. Why? Because markets are driven by dozens of uncontrollable factors: interest rates, geopolitical events, pandemics, public panic. Think about 2020. No model predicted that the stock market would crash and then bounce back to record highs in just months. So instead of trying to time the storm, Buffett builds a fleet of strong ships, great companies that can sail through rough waters. Stop asking, is now a good time to buy? Start asking, is this a good business at a fair price? 2. Getting attached to your purchase price. Here's a painful one. We buy a stock at $50. It drops to $40. And suddenly, we don't want to sell. Not because the company is still great, but because we don't want to lose. But as Buffett says, the stock doesn't care what you paid for it. The market isn't sentimental. It doesn't know what your break-even point is. What matters isn't the past, it's what happens next. Take Amazon as an example. Some people bought it in 2022 and are sitting on tiny gains. Others bought it in 2021 and are down big. Others who held since 2015 are up huge. But today, they all face the same question. Is Amazon a buy, hold, or sell today? Every time you look at your portfolio, imagine you're starting fresh. Would you still buy that stock today? If not, why are you holding it? 3. Believing in unrealistic growth. In bull markets, it's easy to believe in fairy tales. We see companies promising 20%, 30%, even 50% growth annually. Buffett's warning? Very few large businesses can grow earnings at 15% a year sustainably. It just doesn't happen. Let's be honest, growth is exciting, but hype isn't the same as earnings. Take a company like Zoom. During the pandemic, it skyrocketed. Everyone said it would change the world, and maybe it did, but that doesn't mean its stock price should stay on a rocket ship forever. Always question the growth assumptions behind a stock's valuation. If the price already assumes perfection, you're not buying a bargain, you're buying a fantasy. 4. Using leverage. This one's simple. Debt magnifies everything, including your mistakes. Buffett once said, it's the only way a smart person can go broke. When you invest on margin or borrow to buy stocks, you might win faster, but you can also lose everything instantly. Think about hedge funds like Archegos Capital. Billions of dollars wiped out in days, not because they picked the wrong stocks, but because they used too much leverage. If you can't sleep at night thinking about your investments, you're too leveraged. Build wealth slow and keep it. 5. Overanalyzing the details. Have you ever researched a company so much that you forgot the big picture? Buffett says most of his investment mistakes weren't because of a bad lease or a hidden clause. They were because he misjudged the business model or the industry's future. Analysis paralysis is real. You spend weeks researching only to miss the simple truth. It's a bad business. Focus on the three things Buffett does. Is the business understandable? Does it have strong, honest management? Is the price reasonable? If you nail those three, you're already ahead of most. 6. Chasing complexity. Some investors think success comes from solving the hardest problem. They dive into biotech formulas or blockchain white papers, thinking complexity means profit. Buffett's approach? We'd rather jump over 1-foot bars than 7-foot ones. Simplicity wins. If a business is too complicated to explain in one sentence, don't invest in it. Stay inside your circle of competence. If you don't understand it, skip it. 7. Shrinking your investing universe. Imagine a fisherman who only casts his line in one corner of the ocean and complains there are no fish. That's what happens when investors limit themselves to one country, one sector, or one trendy theme. Buffett says, the most logical fund is one that lets us invest wherever the value is. Stay flexible. Don't lock yourself into niches. The world is wide, and opportunity doesn't wear a label. 8. Overtrading. In most jobs, activity equals progress. But in investing, the opposite is often true. You don't get extra credit for effort, Buffett reminds us. Buying and selling constantly is not strategy, it's stress. Think like a business owner. Would a CEO sell the entire company every time the market dipped 5%? No, neither should you. 9. Over-diversifying. Diversification is protection against ignorance. But if you do your homework, Buffett says you only need 5 or 6 great businesses to do really well. Most people own 20 to 30 stocks. But the truth is, your best 3 to 5 ideas will likely carry your returns. Focus your portfolio. Go deep, not wide. Only if you know what you're doing. 10. Confirmation bias. Have you ever Googled something just to confirm your own opinion? Yeah, us too. Buffett and Munger have both admitted their biggest mistakes came from falling in love with an idea. They ignored the warning signs because they didn't want to be wrong. Before you buy a stock, make the bear case. Look for reasons not to invest. If the idea still stands, go ahead. 11. Following the herd. Nothing is more dangerous than everyone making money, except you. That's when the temptation to join the herd is strongest. Whether it's crypto, NFTs, AI stocks, the moment it feels too easy, that's when danger is hiding. Buffett's rule: be fearful when others are greedy, and greedy when others are fearful. When the crowd is euphoric, step back. Ask, is this based on fundamentals or hype? 12. Mistakes of omission. This last one is the most painful because it's invisible. Buffett says his costliest mistakes weren't bad investments, but missed opportunities, passing on Walmart, waiting too long to buy See's candy. Why? Because he hesitated. He wanted a slightly better price. How many times have you known something was a good idea and still didn't act? When something is within your circle of competence and you've done your homework, move. Don't wait. Don't nibble. Take the swing. Let's recap quickly. These 12 mistakes aren't just technical errors. They're mindset traps, emotional reflexes that creep in and quietly sabotage even the smartest investors. But now that you know them, you can avoid them, you can protect your money, and most importantly, you can build real, lasting wealth. So which mistake hit you the hardest? Let me know in the comments. And if you got value from this video, remember, like, subscribe, and share this with someone who's ready to grow. Because the difference between staying broke and becoming financially free is often the mistakes you stop making. Thanks for watching, and I'll see you in the next one.